Every financial transaction requires trust. In today's financial market, it takes trillions of dollars for humans to get that trust.
Now, today we are joined by Joseph Chalom, CEO of SharpLink and former BlackRock senior executive. Now, Joseph has been known for SharpLink's strategy of using Ethereum as a treasury asset, combined with staking, yield generation, and all of the wonderful benefits of tokenization. So let's just get straight into it. Joseph, so nice to have you with us.
It's great to be here in London.
Now, Joseph, SharpLink is known for its Ethereum treasury strategy. So when it comes to Ethereum, some critics are calling out your strategy as a high-stake gamble rather than a strategic master stroke. Now, what would you say in response to that?
Sure. So for listeners, SharpLink is the second largest Ethereum treasury company. And what that means is for those who want access to Ether, which is the token that secures the Ethereum network, we are a superior way to get that access. Many investors cannot go out and buy spot Ether, just like they can't buy spot Bitcoin. You can now get that ownership through a publicly listed company on NASDAQ, very institutionally run, and you get three benefits. One is just the capital appreciation of Ether, the underlying asset, which is the second largest cryptocurrency. Second is we make that asset productive, and we'll talk about that in a minute, to get yield. And third is we use that Ether in the ecosystem to really help bootstrap the Ethereum ecosystem and protocol. And all of this is on behalf of investors. And Ethereum is a very volatile asset. So this is meant for people who want to get exposure to this long-term value-creating asset.
Okay, so let's actually come back to Ethereum then. Ethereum obviously is quite volatile over the past many years if you look at its trajectory. And you mentioned there that Ethereum can be productive as opposed to just being an underlying asset to hold, and hopefully it appreciates. So what exactly do you mean by Ethereum being a productive asset?
Sure. So Ethereum is volatile just like Bitcoin is, but it's actually had spectacular investor returns since its origin about 10 years ago. So what do I mean by that? For the listener, Bitcoin is a great store of value. Think of it as digital gold. And the Bitcoin network does one thing. It stores and moves Bitcoin. Ethereum is very similarly a decentralized network, but it's a decentralized network. Think of it as a new internet on which you can build applications, financial applications, AI applications. And the way it works is those transactions on that network, whether they're stable coins moving, whether it's funds moving, whether it's borrowing and lending, whether it's NFTs, any one of those transactions has to be secured cryptographically and written on the chain. And it's done with a token called Ether. So if you own the Ether token, which is what our treasury is about, you can stake it onto the network. And in return, you get about a 3% dividend yield, which Bitcoin does not. And that's what I mean by it being a productive asset. You can accumulate a lot of Ether on behalf of investors. You can stake it to the network. And in return, you get 3+% yield, which compounded is a really good return in a treasury strategy.
When we look at the overall use case of Ethereum as it progresses through time, would you say stablecoins are the network's biggest utility at present? And what other utilities do you see or foresee in the coming years?
Sure. So there's a lot of blockchains. There's Bitcoin, there's Ethereum, there's Solana, and many others. But the three biggest immediate use cases that are happening on Ethereum are, one is this idea of a stable coin. There's about 280 billion US dollars worth of stable coin circulation. You can think of it as a digital currency or a digital dollar that actually helps move money and create value on the blockchain. That is over 60% is used and secured on Ethereum. So there's a lot of chains out there, but Ethereum is the dominant chain for stablecoins. And there's a view that stablecoins the circulation will go up about 10x. Secretary Bessent, the US Secretary of Treasury, believes it'll go to about $3 trillion in the next couple of years. The second use case is just taking traditional stocks, bonds, and funds, which today in capital markets are very inefficiently moved. They move trade day plus 1 or 2. There's a lot of risk. There's a lot of friction. There's a lot of cost in intermediaries. If you take those assets and you represent them in digital token format on Ethereum, they can settle instantly. They can be programmable. And a lot of risk is coming out of the financial system. Over 80% of tokenized funds are happening on Ethereum as opposed to other chains. And finally, there's a whole distributed finance or DeFi ecosystem of borrowing and lending, and most of that is happening on Ethereum. And if you believe there's a large wave of this coming, and you would have heard from Larry Fink at BlackRock yesterday that all assets are being tokenized and they're rapidly accelerating that, you want to own Ether, the token, because it's going to go up in value as the overall network gets a network effect. So it's really exciting. It's stable coins, it's tokenized assets, and it's access to DeFi protocols.
Yeah. So, like, say, for instance, if I were to meet Larry Fink of BlackRock, say today, and he's obviously very passionate about tokenization, and I were to say to him in 5 years' time, Larry, where do you think that tokenized assets will be? Where is the main place that they will be deployed and settled?
So I can't speak for Larry. I retired, but I know one thing after spending 20 years at the largest asset manager in the world. There are 3 things that matter that drive decisions. One is security, the second is trust, and the third is liquidity. These institutions will go where those 3 characteristics exist. And the Ethereum launched July of 2015. It's never gone down once. It has the largest number of security validators, which are required to make sure the network operates and transactions are booked correctly by a factor of 10x. And third is, as I mentioned, stablecoins and tokenized funds. The depth of liquidity is on Ethereum, and I know that's where institutions will gravitate. And that's where, when I was at BlackRock, when we launched the largest tokenized fund in the world called BIDL, we initially launched it on public Ethereum.
Yeah. Yeah, that's interesting because I suppose security and trust are the 2 words that I've sort of stuck in my head from this conversation with you. Now, I suppose let's turn to Ethereum and its volatility that we've touched upon before in our questions and answers. Like, if you pull back and look at how much Ethereum has appreciated since 2015, but let's also look, if we sort of like focus in on different times, look at those dips, look at those really sharp drops. Like in 2022, we saw Ethereum plummeted and 70% of its value was wiped out. So if there were a similar sharp drop in the future, how does that impact SharpLink's balance sheet?
Sure. So taking a step back, crypto assets are volatile, and investors should understand that. And many investors appreciate that volatility. It has a bit of an asymmetric upside, but in almost every cycle, crypto has gone up asymmetrically and has also come down. The beautiful thing about a treasury strategy is we own the underlying Ether. There's nothing requiring us to sell the tokens. If the price of Ether goes up, our investors will get long-term capital appreciation. If and when the price of Ether comes down, the stock price will drop. But there's no requirement for us to sell the Ether. We are long-term holders. We are long-term accumulators. And when you hold billions and billions of dollars of Ether, you can play really positive, benevolent roles in the Ethereum ecosystem. So to date, we have no debt on our balance sheet. And if at a time we decide to raise debt, it would be done in a clean way without securing it to our Ethereum token. So if you raise debt and it's secured by your tokens, you could be a forced seller. If you're just a digital asset treasury accumulating ETH, there's no reason I need to sell. But you're correct. If the price of ETH goes up, our stock price will likely go up. And the same is true, but I'm not a forced seller.
So, Joseph, I suppose if we pull back out a little bit, would you say that the broader theme here, or the broader strategy, to be more precise, is to take some kind of ownership in the future of the internet? So instead of like an internet of information, you're talking about an internet of value on a very secure foundational layer.
So we have a very strong view, a macro thesis. And by the way, there are other really competitive DATs out there who share the same view. This idea of co-opetition. You have competition, but you collaborate and cooperate on a thesis. The thesis is very simple, which is the current financial system in the US, in Europe, in the UK, and Asia is very frictioned. There are a lot of intermediaries. There's a lot of risk associated with trading and investing. The view is that most of that will end up going onto new rails, more efficient, decentralized rails where trust is built in. So what's very clear is every financial transaction requires trust. In today's financial market, it takes trillions of dollars for humans to get that trust through contracts and insurance and ISDAs and counterparty risk and settlement risk. But if you can transact on a neutral, trusted network like Ethereum, transactions can settle in an instant. We have much less risk, and that'll actually provide a lot more prosperity than if you're spending trillions of dollars worrying about the risk of your counterparty. We believe that's going to happen. It's happening as we speak. That's why we're accumulating as much Ether, which secures the network. And in the long run, if there are more transactions being secured on the Ethereum network, the price of Ether will go up. That's been the trend we've seen over the last 5 years. And that's the macro multi-decade thesis. This is not a trade, it's an opportunity.
Joseph, thank you very much for coming on the BeInCrypto podcast.
My pleasure, and I look forward to seeing you next time in London.
Now, if you enjoyed today's conversation with Joseph Chalom, CEO of SharpLink, please click and subscribe, because I'm sure we will see him on here again at a point in the not so distant future.